Hi, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. It is October 2nd, 2015, and we are finally through September. Now we're firmly in October, and we're looking at a chart of the S&P 500. This week, even though we had some selling earlier in the week ended up, as you can see here. We actually had a very strong day today. And I want to maybe mention something a little bit about that because, these big, strong rallies in a downtrend can be very deceiving and hook you if you're not careful. So let me just say that with a pretty high degree of confidence, and I mean probably 90% or greater, this is a downtrend, and all this is a counter-trend rally into this downtrend. In fact, I think the downtrend resumed on Fed Day, and this was the first move down in the second wave of the downtrend. So we've got some pretty heavy selling, I suspect, next week, which should take us to new lows below this October 24th low. Now we might, let's just talk about a couple different scenarios, and I want to make clear, I don't know, usually I'm not doing as good a job at making this clear, but there is no way to really know what's going to happen on the next trading day or even the next couple of trading days. And the reason is, as you can see, even though this is counter trend, we don't know exactly how it's going to play out as it makes its way up here. And so, this counter trend could have been as simple as, this, okay? But it wasn't that simple. It was very choppy and complex, and as it made its way up here. So this is why on any day-to-day type basis, the market is very difficult to predict. And this is, when people say you can't predict the market, this is really what they're talking about. You can predict with a level of probability once you have a good idea of the direction of the trend. And so this is why the trend is so important, is to identify. When you have a change in trend, it's very important to identify that this is not just a pullback. This is a trend change. And there's a couple of reasons. We don't know in the sense that you think of knowing something, but a way we can feel more confident, let's put it that way, that this is a trend change, is look at this price action. This was the beginning of the year here. This is a topping pattern. See how this is a top. It's a rounded kind of top. And then, of course, the selling started to accelerate right in here. But this is big money kind of sneaking out of the market over time. And then once it broke the trend line, there was no more sneaking. It was time to hit the sell button. So, again, with a high degree of confidence, this is a top. We had a very long topping process. The market, the sectors that make up the market, slowly but surely started to move in downtrends, and then the market basically fell under its own weight. That's kind of how it happens. Now, let's focus in on this area over here, because this is what's going to be important in the next several weeks. I was looking at this and I was trying to figure out what's likely to happen here. I think what's likely to happen is this looks like a very strong continuation of the trend here, and it found some support here and rallied. So to me, this market looks like it might go, a little higher, but then we're going to have some pretty heavy selling, and we'll likely take out this 1825 area with this next leg down, maybe even lower than that. I mean, we could go as low as down here around 1780. In fact, I think there's a high probability that we'll probably take out 1825 pretty handily, and pierce 1800, and maybe even get down as low as 1780. And this is going to happen a lot faster. I mean, it'll be a smaller version of this move right here. It'll be a smaller version of this move right here. This was a pretty rapid, only took a couple of days. This one might take, a whole week, but it's going to move pretty rapidly. So that's what I would look to happen. Let me zoom. I can't really. So the key low here is this low back here. We've talked about this before. How do you identify, which low is key? I mean, there's a low here, there's a low here. These are all lows. How do you know which one is the key low? And we've talked about that before, but we can cover it again. The reason we select this low, and again, we don't know if this is the important low, but the reality is the price action was up all the way through. It was choppy, but it was up from this point right here all the way up to here. So this is the important low, not this low, not this low, not this low. I mean, these are all important lows too. The price action was up from there, but this is the pivot that we want to be focused on, because this is where price action came down, and then virtually the whole time from this low, price has been grinding its way higher. So now this low is the low we want to focus on when we're trying to identify support. So that's why the blue box is right here at this location. Excuse me, my allergies are acting up, so I apologize if I'm sniffing and snorting a little bit. So this box is a support area for this trend off of this important low, which was inside the channel, and then of course we broke outside the channel and started to fall. So that's the S&P 500. Probably beat that to death good enough. Can stop, and let's look at volatility. If I can get volatility to come up, there it is. So volatility, this was that August 24th low in the market. Of course, we had a spike in volatility, and we talked about volatility pulling back to potentially this trend line. But we thought, I mentioned that I thought it was going to stay within this box. And for the most part, it has. You can see it got outside. I mean, again, nothing scientific about this box. I just visually looked at the chart and kind of arbitrarily drew this box on here. But you can see how much of the VIX price action is contained in this box. I mean, a fair amount. There's hardly anything out here to the upside. And since this move started up, there's only this kind of price action to the downside outside this box. So it turns out this was a pretty good range to put around the VIX. But it looks like the VIX, the VIX could come down and touch this trend line. But I think the next move for the VIX is out of this box. And I don't think it'll make a new high, because the nature of that first move down, it's a lot of fear in the market, and initially people are ill positioned for that kind of move. But the second move, where we retest that low and we'll actually pierce that low, people are a little bit more prepared. They're hedged, and so they don't go into the market to buy index options with as much veracity, and therefore you'll likely not get the VIX. Even though the market will make new lows, you're not going to get the VIX up here on new highs. You might have the VIX come in this area here and then chop its way back down again as the next counter trend rally gets underway, and we work off some of that selling. Let's look at the euro. The euro, we got some spots drawn here on the chart, and of course the euro sold off pretty dramatically. It's been kind of grinding its way up higher. It hit this box that we had drawn up here. So it's kind of interesting that box is off of this high right here. But isn't it interesting how, I don't know when we put this box up here, but certainly it was before price, popped up in here. And started to pop back down. We put this box up here, I'm guessing somewhere, around here in this price action. I looked at this pivot here, this pivot right here, and said, where do I need to put a DP, a decision point box, and to put it right there. And so, it seems like magic, but it's really not. It's just looking at, it's identifying which pivot is important. So let's do a little bit of that just for practice. So when your eyes look at this chart, what pivot area is important? Is this area not important? So you would want to, there's a pivot right there. Okay, you see that pivot. Now on a smaller time frame, in other words, let's say you're trading, these moves in here look really big because you're trading on a 15-minute chart or 60-minute chart or something like that. Then these moves in here can actually look quite sizable. And then when you trade the larger degree trend, these pivots end up being very important right in here, like so. This pivot here. So it all depends on the time frame you're looking at. And in this particular case, we're looking at a very large time frame. So we're only looking for key pivots. This move down here, and then the bounce, that appears to be a key pivot. This move down here, and then the bounce, this area right here tends to be a key pivot. This area right here clearly is a key pivot. Okay, so we're we'll probably mark this one in a new way. I don't know how to mark. I'm not sure how to mark these pivots other than using these boxes. But once we make a new low, this pivot here is going to be important, and you'll see why, because the price action, first violent move on the price action will be to an area above this pivot over here somewhere, and then a pullback, and then higher prices. So the one good thing about a bear market is you get a lot less chop, and it's easier. It ends up being easier to see the patterns. The bad news about a bear market is most people just don't know how to make money in the bear market, and so almost the best thing you can do is just sit on the sidelines and kind of take it easy. Let's look at the 10-year interest rate. We've been talking a lot about this market for a long time now, and the low, which I think was about 1.38, was way back here in the middle of 2012. And while it looks like this can grind its way lower, it looks, at this juncture, it looks like it's finding support off this diagonal trend line from this channel. And it's just interesting how this box was drawn on here some time ago. I think I drew it. I don't know. I can't even remember when I drew it. But we pulled down into this box. We rallied a little bit to a lower high. Pulled down into this box again. And this is just the market kind of consolidating. We had this big, long sell-off in interest rates, and then shot up, and then we got a little bit more selling. And it's just interesting that how we got two individual days where they touched that box. So if this area holds, then we could say that this box provides pretty strong support, and we would be looking for the 10-year Treasury to begin lifting northward at this point. Now, how are we going to handle our debt and all these kinds of complications that come about by higher interest rates? I don't know, but the market basically is beginning to tell us here that maybe $19 trillion is too much to pay off, and we might have to start charging the U.S. government a little bit more money and interest. And so I think that's what we're at the very beginning stages of what you're seeing there. Now, a lot of elderly people have gone out and maybe unknowingly, unwittingly, but have gone out and gotten into the high yield market, and that market's under a tremendous amount of stress right now, and is going to continue to be. The spreads between high yield interest rates and the 10-year Treasury continue to grow, and that causes stress on these high yield instruments, and they're coming down. So if you have any older people in your family, just caution them about the high yield. The problem is, the banking system has been so manipulated by the Fed that an old person can't put their money just in the bank and draw like 4%, on their savings. They have to go and take risk that they really don't want to take, aren't prepared to take at this juncture in their life. But the government's just forcing them to take unnecessary risk because it wants to print money and spend money and all this other crazy stuff. So I'll get off that soapbox, but that's kind of what you're seeing there. Germany, I think, still looks weak. It looks like it wants to come down into this support box. So maybe it's made the low, because it is lower than this low. But it just feels like it needs to go a little lower. It may just end up touching the box and then bouncing. But eventually it's going to slice right through that box and go much, much lower. Let's look at the yen. The yen totally, it's totally breaking down. It never got into this box. Totally breaking down from here, and likely to roll over and go lower, but it'll probably have some sort of counter trend rally first. So, some move back up to this 1250, even 1300 area before it rolls over and starts heading south again. Let's see, what was the well, I don't want to look at that. I was going to look at something. Let's go look at the dollar. Here's the U.S. dollar. Put it on a weekly chart. Is where? Here it is. Okay, so this is the familiar chop, chop, chop of the U.S. dollar. It pulled back, just touched that decision point area, and it looks like it's trying to grind its way and break out of this range and actually go to much higher highs. And you ask, well, how can that be? And we're having this deflation, and it just has to do with the dollar being the best looking bad actor or whatever. So when there's massive deflation, people rush into the dollar because it's perceived the safest thing you can own other than gold. And so it's just a pretty hectic time, and the dollar tends to be a place where people park money. So that's kind of what you're if you go back, a good illustration of this, let me see if I can, let's go to the 20-year chart. So here's the 2008 financial crisis, and you can see the dollar had been going down for a long time, and we were at the very ending stages in 2008 of the dollar decline. In fact, right around in here somewhere is the Hurricane Ike, or whichever one it was. And isn't it interesting how the price began to lift there and make higher highs and higher lows? So, these fiat currencies, they're pretty, it can be pretty tricky. So just what we're trying to do with the dollars, we're just trying to see, is the dollar becoming more powerful or less powerful? More powerful actually improves your standard of living. A strong dollar actually will improve our standard of living in the United States. then politically people complain about it because our exports get more expensive. But really, this is not that important. A lot of people point to it, but it's really not that important. What's more important from a citizen standpoint is to have a strong currency. So don't get too wrapped up around, they're devaluing their currency so they can make exports look more attractive. Well, okay, but that's a temporary measure. In the long run, it doesn't work. So in the short run, I guess we're going to do it and pick up a quarter or two worth of good performance, and then it's going to pull back and go to the toilet. So just I don't know. I'm just trying to give you a sense of the main thing I want you to understand is when these other markets start kind of showing stress, what ends up happening is people rush into the dollar because the dollar's never defaulted. It's the reserve currency of the world, and it has all this status with it. So that's why that happens. Let's look at gold. We right now gold and the dollar are kind of confusing to me, and we've talked about this before that gold really can't go up too much until the dollar starts to fall. So I've still got our roadmap on here, our low zone and our high zone, and you can see clearly it looks like we're at the end of this trend. It keeps wanting to test slightly lower areas and things like that, but now if you look at it up close, let me bring it even closer. You can see here we have a low, we have a higher low. I mean, you can just see that from here to here, the lows are getting higher all the way up. And this is what we would expect if the dollar was about to make another run upward. Let's see what else we have. I don't know that I've got that much more today. We can look at commodities. Look at this. The 2009 low for commodities was 1782. We blew through that, back in very first of the year, consolidated a little bit, and then sold off again. So we've got some real problems, and they're going to manifest themselves in farming and labor and just all the stuff with farming. So I don't know. I don't intend to grow my own food, and I don't know how you guys feel about that, but I'd rather just go to the grocery store. So I kind of hope farmers do pretty well and can continue to be productive. And but one of the constituents of this particular instrument is farming, and you can tell that it's feeling some stress because we've got new lows below the October 9th low. The March 9th low. I guess that's about it, everybody. I left off some stuff here. I couldn't get NinjaTrader to load. There was some problem with the server, so wasn't able to show you. I've got some different kind of charting over there that I could show you. But bottom line is, we're gonna make new lows. We might actually get some intermediate term highs in the market, just like we had today. It's going to be very hard for the market to go much higher than where it's at right now, given the structure of the market. So you might get a little pop on Monday morning, and then have the market immediately sell off and start to approach this zone down here. Whoops, wrong chart. If I can get it to pull up, I apologize. It's taking a second here. So, if you can get the people in this group to cooperate, and what I mean by that is, be okay, I guess, with the market going down. You really don't have to cooperate with the market. I don't know why I use that word, but we should get some pretty good selling, and this low back here is the key that we want to focus on. So I would say if you want to be conservative and you're short the market, you might. I got the SPY up. Let me put the S&P 500 up. And you're short the market and you're kind of conservative. What you could do is get out around this 18.15 area or so. The market's going to pierce that pretty hard. Of course, it could rally really hard after it does that, but I don't think so. I think we're actually going to probably go down here even a little lower, around 1780. So look for that to happen probably next week. The low won't be in next week because there's still some moves that need to play out here. Let me show you kind of what it would look like. And this is, again, there's no way to know exactly what it looks like, but I just want to give you a sense of what could be happening here over the next few weeks. So you're going to get a move like this, and then it's going to chop its way down to here, okay? And then we might get a pretty strong move back up into this area, let's say, and then another move that looks more like bottoming kind of process, where you get something like this, and you might get another, say, 30 points lower than this low. And then what you're going to see is a really strong move like to here, and then a pullback like this, and then another strong move, and then another pullback, and then another strong move. So we could get a move. I've talked about it before, but in between these two lines here, and this will be counter trend. Now, if you're in the 401k, we'll try to give you a good, day or two notice about getting in right here, and then you would just, ride it up here for a month and a half in your 401k. Anyway, that is about it this week. Everybody, I want to go ahead and get off and let everybody get back to whatever they're doing. I really appreciate you coming in, viewing my videos. I really am just doing this for the people out there. I'm doing it anyway, but I'm recording the video really for the people that are interested in coming in and watching it. And just as this bear market unfolds, you're not going to get any help from Wall Street. You might as well you can watch CNBC, but hit mute. Make sure you don't listen to those guys. They're going to help you lose money if you listen to them. So, same thing with Bloomberg. Don't listen to those people either. If you like watching the little ticker go by, just turn it on and then hit mute. The election season is looking pretty entertaining. I think if this bear market continues to unfold in a pretty rapid fashion like they typically do, I don't think there's a chance in hell the Democrats can lose. The Republicans are going to hang this economy around their neck when it starts to sell off. Even today we had a jobs report, and there was only 142,000 jobs created in our economy. That is very, very small amount of jobs. This economy, just to account for the people that are retiring every day, just to break even, the economy needs to produce about 300,000 jobs. So you can see we're well below that, and that's a real problem, and over time that's going to accumulate into even a bigger problem. So just stay tuned, stay with me. We'll navigate these little ebbs and flows for you so that you can A, not lose money, and B, maybe even make a little money here and there as we have the longer counter trend rallies that you can stay in your 401k a little longer than just a couple of weeks. So that's it. You can follow me on Twitter @InvestorClass, or you can come in here and watch the YouTube videos at Middle Class Investor. Just search in the search box, or tell your friends and family to search in the search box on Middle Class Investor, and you can start watching the videos, and you'll actually learn. You'll actually learn quite a bit. We'll probably, during some quieter times in the market, we might spend some time just doing a little education here and there to teach those that are interested in some other things about investing, trading, things like that. Okay? Thanks a lot, everybody. I really appreciate it. Take care and have a great weekend. See you next time. Bye-bye.